Hello, Assalamu alaikum. Okay, class. Today we'll continue with our A2 paper, 2000 November 2019, paper 32. We have done up till now three questions. In last two videos, we have completed three questions. Now we'll start question number 4 today. So here is your paper. R Limited does not hold any inventory. The non-current asset schedule for R Limited December 31st December 2018 was as follows. Okay. Now here cost. What we have to do actually. So before entering, first we know what we have to do. Always read the required first. So you would know okay, how to what you have to do in this question. Achha. Identify the type of business which keeps no inventory of goods for resale. Service industries, service sector, tertiary sector, which don't use inventory. Okay. Okay. So it's only 1 mark. Mashallah. Now prepare the statement of cash flow for R Limited for the year ended 31st December 2018 according with IAS 7 ignore taxation. Now when you are making cash flow statement using IAS 7, so it means we have to start with net profit, profit from operations and we have to convert the profit from operations into profit from operations on cash basis. Then we have to add and subtract financing financing and investment activities. Okay. So now I'm moving to the question. See, what we need first, profit for the year. This is $135,000. Then, so what we'll do, we'll make a cash flow statement. Done. Now, dollar sign in 2 columns. Now, profit is how much? 135. Done. That is the profit. Okay. Now we have to add interest or finance cost. Okay. So how much is the finance cost? So we'll go to the question again and we'll see how much is the finance cost. Now finance cost is 16,000. Okay, so we'll add back finance cost, so we would know how much is profit from operations. Okay. So 16,000 and profit from operations is how much? 135. 135 plus 16, 151,000. This is our profit from operations. Now, all non-fund expenses. Yes, depreciation. depreciation. How much is depreciation? Now we have to look for the depreciation. So we are going to the question again. Now see depreciation. Here is the depreciation. 27 for equipment and 21 for motor vehicle. 27 and 21. Now equipment is how much? 27,000. And second one, after equipment is motor vehicles, 21,000. These are two non-fund expenses and we have to add them back. How much? 48,000. Done? Okay. Now, next step. Again, we have to see the non-current assets carefully. There are additions, but there are disposals also. Motor vehicles disposal, 40,000, and accumulated depreciation, decrease in accumulated depreciation due to disposal is 17,000. It means the asset is sold as value 40,000 minus 17 is provision, 23,000 is the book value of assets or motor vehicle which we have sold, and out of which it was sold for 30,000. 23 minus 30. 7,000 is profit from the sale of non-current asset. Okay, so this is a basically capital asset. So we are going to deduct it. That is done. Okay, what's next? So this is all we have done with the non-current assets. Now, one thing is left, the purchase of non-current asset is left. Now, trade receivable is increased by 22,000. If your trade receivable is increased, it means, if your trade receivable is increased, it means your cash flow is decreased. So we have to deduct increase in trade receivable. Even trade payable is decreased, it means it is also reason for cash outflow. Okay, so this is also going to be deducted 18,000. 22 and 18. Okay. Less increase in trade receivables. That was how much? 22,000. So that was supposed to be deducted. So plus that would be backup. So negative figure. Now 22,000 done. And less decrease in payables. Done? Any other thing left? No, no, no. So, see, profit from operation is 151,000 minus, sorry, plus 48 minus 7 minus 22 minus 18. Answer is 152,000 is your answer. 152,000. This is cash from operation. Net profit on cash basis. Cash from operations. Okay, we are done with that. Then now cash from operations. Now what we have to do? We have to deduct interest. That was 16,000. We have to keep it in the bracket, so we should not forget to deduct it. Otherwise, we could have handled this amount and told you. Now, after paying interest, we have 152 minus 16, 136,000 is our net cash from operating activities. Net cash from operating. Okay. Now what to do? Next, we have to now cash flow, cash flow from investing activities. This is adding. What we have done to issue the share. Okay. So go back to the question and see. Okay. Okay. Additions. We have spent $80,000 to buy an equipment. And how much did we get from the disposals? 30,000. Two things. 30,000 we received from selling and 80,000 we spent on buying. So this is purchase of purchase non-current assets. How much? $80,000. Okay. Then proceed from sale of motor vehicles, or you can write non-current. Okay. Now you can keep. This is outflow of cash. This is 30,000 inflow of cash. Now, total net cash used in investing activity is showing outflow. Getting my point there? 50,000. Now, cash flow from financing activities. Cash flow from financing activities. Next heading. Okay, done. Okay. Financing activities. Okay. So we have to move again to the question C. Issue of shares with share premium. 144,000 is our total proceed from sale of share. Getting my point clear? Okay. And 80,000 something. This one. Dividend paid. So 80,000. Now proceed from issue of shares how much? Dollar 100. Now dividend paid 80,000. Dividend paid 80,000. So net cash from financing activities. Okay. How much? 144 minus 50. 64,000. Done. Now we have cash from three areas. One is operating activities, then investing activities, and then operating activities, then investing activities, then financing activities. Getting my point clear? Now what is the total? 136,000 minus 50 plus 64. 150,000. 150,000 net increase Net increase in cash and equivalents $150,000. Now cash and equivalents on 1st January 2018 must be given in the question. See. Now see net increase, yeah, this is the point. This is the point. Okay. The net increase in cash and cash equivalents was 3 times the amount of overdraft at the start of it. So 1,50,000 is net increase in cash divided by 3. 50,000 was bank overdraft. सीधा सीधा बोल दे भाई, घुमा घुमा के. So that is bank overdraft, so it should be shown in as a negative value. 50,000. Now cash and equivalents on 31st December 2018. How much? 100. Done? This is the end of statement. Easy? Okay. Now let's go to the question again. What does it say? So this is done. This is also done. Now, state why the revaluation of non-current assets is not disclosed in statement. Revaluation of a non-current asset is not a fund activity, it is a non-fund activity. Okay? Non-fund reserve actually. So revaluation reserve is a non-fund reserve, it's just a calculation. Okay, it does not involve any movement of cash. Getting my point here. That's why we don't include statement or cash flow statement. This is also done. Okay, what about D part? The Director of Finance has produced a cash budget for the year ending 31st December 2008. Company will again have an overdraft. After 1 year, we have completed this statement on 31st December 2019, and it is showing a positive cash balance of $100,000. Now, the director says that again next year, at the end of 31st December 2019, we will be having an overdraft. What would be the reason? 5 possible reasons. I think the easiest questions in A-level. Easiest question in A-level, I think. Why? The reason is all we will be having overdraft. It means we will be using cash. Why we use cash or bank? Why? To pay expenses, to pay dividends, to pay liabilities. Getting my point here? To pay expenses, to pay liabilities, to pay what you call dividends. Okay. Then it might be possible after this season. It might be possible that your sales is mostly on accrual basis, on credit, not on cash basis. Done? Okay. Question number 5. Young manufacturers okay. Now, young manufacturers to product X and Y, the following budget information available: production in units, machine hours, direct labor hours, direct material, direct labor. Okay, production over 180,000 to be allocated to each product on the basis of machine hours. Okay, now 50% markup will be added to the production cost of each product. Okay, now class. what we have to do first, calculate for each product the product unit and the cost, production unit production cost and unit per unit cost and unit selling price. Okay, with a markup of 50%. Don't forget that. Okay. Now again we'll go to the question. Sorry, answer sheet. Now product X, product Y. Done. Okay. Now first what we have to take, computing cost, direct materials. Direct materials. Direct materials we have 5,000 units per unit material cost $60. Direct materials 5,000 units multiplied by $6. So that would be 300,000. What about product Y? We have how much? Now direct material for product Y is 5,000 units multiplied by dollar multiplied by dollar 75. So that would be how much? 5,000 multiplied by 75. $375,000. It's not about sign. Okay. Now come to direct labor. Direct labor work for 5,000 hours multiplied by $45 per hour. Oh my God. Multiplied by $25 per hour. So 5,000 multiplied by 25, $125,000 is the value of $125,000. What about the labor work for 7,500 hours multiplied by $30 for product Y. 7,500 multiplied by 30, answer is 225,000. Now overheads, POH, production overhead. Production overhead is total 180,000 divided by 80,000. Now production overhead. Production overhead is total $180,000. Let's move to the question. See, $180,000 and total machine hours, yeah, 10,000 plus 20, 30,000. 1,80,000 divided by 30,000, $6 per hour is your, per machine hour is your overhead absorption rate. Now see, production overhead for the X machine hours is 10,000 machine hours multiply by $6. So that would be 60,000. And your machine work for 20,000 hours. 20,000 machine hours multiply by $6. Answer would be 20,000 multiplied by 6, 120,000. Almost done. $125,000. So the total cost is how much for product X? 300,000 plus 125,000 plus 60,000. 485,000. What about this? $375,000 plus $225,000 plus $125,000. $725,000. And this figure is wrong. 720,000. Okay. Now see, divided by number of units produced. So, number of units produced is 5,000, and they are also, product Y is also 5,000. So, unit cost, how much? $485,000 divided by 5,000, $97. $97. Okay, and here per unit cost, dollar how much? $720,000 divided by 5,000, 144 unit cost. Okay. Now see, markup. Markup is 40%. So it means we have to take 97 multiplied by 140%. So this is 135. So markup is 50%. My fault. 50%. Just have a look. So 50%. Again, going to the answer. So 97 multiplied by 150%. 145.5 is the selling price. 0.5 is the selling price. And here 144 multiplied by 150% is $216 is the selling price. Got it? which is the 4 requirements. Getting my point clear? Product X and product Y. Okay. Now again we are moving to the question. Let's see what the question is saying. Calculated production. Okay. Now, on the advice of management accountant, Young is considering using activity-based costing to allocate the production overheads to both products, not on machine hours but activity-based costing. Now, the following information is available: machine setup. Now, the cost is same 108,000. But we have to divide the cost into product. The overhead cost is divided or split between product X and product Y on the basis of activities. Machine setup, handling, and inspection like that. So activity-based costing is when you split the cost of overheads on the basis of activities performed on products. Okay. So this is activity-based costing. Now recalculate for each product the unit product cost and the unit selling price of using A, B, C. Oh my God. Now it means we have to move for new term. First we have to calculate production overhead for product X and product Y. Okay. Again, going to answer sheet. Now, allocation of overhead on ABC. Activity based cost. Okay. Wa alaikum salam. Okay, class. So, inshallah, we'll resume the allocation of overhead cost activity based costing. We'll continue in the next lecture, inshallah. So, that's all for today. Thank you. Take care. Allah Hafiz.